Welcome back. This week, we're going to begin with a new segment, the Reverse Mortgage News Roundup. And first is SmartFi has hired one of our industry's veterans to head up their new retail sales division. Housing Wire reports that SmartFi Home Loans will be launching a retail reverse mortgage division, which will complement their existing wholesale channel. The San Diego-based lender has hired industry veteran Paul Fiore to head up their retail sales. Fiore is a well-known reverse mortgage professional who recently worked with Finance of America. That was after the company acquired American Advisors Group, where he worked at AAG for several years as their chief retail sales officer. Finance of America's reverse stock split has boosted their share price after being warned of being potentially delisted from the New York Stock Exchange for share prices that fell below $1. Finance of America's reverse stock split has boosted the company's share prices. Housing Wire reports that FOA's share price jumped from 73 cents a share at the end of trading on Thursday, July 25th, to $7.19 per share the following morning, meeting the company's anticipation of a 10-to-1 ratio. A reverse stock split consolidates a company's number of outstanding shares on the market by merging existing shares, which will boost the price. Mark your calendars, August 14th, that's Wednesday, August 14th at 11 a.m. Pacific. We'll have a free webinar on overcoming reverse mortgage objections. As Software as a Service provider, Reverse Focus, our parent company, and Heckam World will present a free webinar. And you can register. We're going to include a link in the show notes below, and it's going to help you better address objections. Christina Harms, CRMP, will be sharing on how to effectively prevent and overcome the most common objections that we hear to reverse mortgages. And topics include, in part, how to explain loan proceeds, selling value instead of the cost of the loan, how to frame interest rates, and the origins of most objections. So be sure to sign up. We're going to include a link in the show notes below, and also watch your inbox for your invitation. A MarketWatch reader called Concerned for My Family wrote, "Dear Big Move" in MarketWatch, saying, "I own a home worth $400,000. I recently applied for a $100,000 loan against a property. I've never had a mortgage on my home. My loan term is for 30 years, but I will be gone long before that. My interest rate is 6.6%. I pay approximately $672 a month. What will happen to the balance of the mortgage when I pass? I have willed the house to my grandchildren to be sold and the funds divided after I'm gone. Was taking out the loan a good or a bad move? I need the cash now. Please tell me how it could affect the value of the house in the future. I was in the process earlier of applying for a reverse mortgage and decided against it." And MarketWatch's Big Move, the columnist, replies in part by saying, "The fact that the house has a loan borrowed against it will not affect its value in the least." Very true. But after you die and your house passes on to your grandkids, they will be obligated to settle the debt. They can choose to resolve that by selling the house and using some of those proceeds to pay off the loan. They also add, in some cases, such as with a reverse mortgage, that balance will become due and payable after the last borrower dies and the heirs have received a notice from the lender. Phil Crescenzo Jr., Vice President of the Southwest Division of Nation One Mortgage Corporation, said that the decision for her to take on a second mortgage was a good move. He added, "You are tapping into your home equity to increase your cash flow now and allowing a plan for the future that is clearly defined." Now, here are some of my observations. The homeowner said that she needed cash now. Now, certainly access to $100,000 is a boost to one's cash on hand, but it comes with the burden of a $672 monthly mortgage payment. Now, what we don't know is if this homeowner will be using some of those loan proceeds to be making the mortgage payment each month. Now, in many cases, some do. And this is where homeowners can become very short-sighted and just focus on the access to the loan proceeds or the cash without fully considering the consequences of taking on a new monthly obligation. In such circumstances, taking out a new mortgage is not the best choice if it's going to create a financial hardship or it strains monthly cash flow. And in our last story, a recent column from the Sternberg Law Group addresses a question that some unfortunate homeowners may have today. They've defaulted on their mortgage payments and now they are facing foreclosure, but they are interested in getting a reverse mortgage. Now, the columnist notes that homeowners in California who do find themselves in this situation may wonder if a reverse mortgage could be a viable solution to avoid losing their home. The author explores if it's possible to obtain a reverse mortgage while in foreclosure in California, the steps involved, and the potential benefits and drawbacks. First, if the homeowner is in foreclosure, obtaining a reverse mortgage can be challenging, but not impossible. The main hurdle is that the homeowner has to have sufficient equity in the home to qualify for the reverse mortgage. Additionally, they add the proceeds from the reverse mortgage must satisfy the existing mortgage balance and any arrears or charges in the foreclosure process. Second, what steps should be taken? The first the firm advises is to determine if there's enough equity in the home to qualify for a reverse mortgage. If so, then speak with a HUD-approved reverse mortgage counselor to fully understand the loan and its implications. Following that, one can proceed with the application process. They note the biggest advantage of a reverse mortgage is that it stops the foreclosure process dead in its tracks. Also, the distressed homeowner will find relief in not having to make monthly mandatory mortgage payments, which led to their foreclosure in the first place. The firm does advise while obtaining a reverse mortgage during foreclosure in California is possible, it does require careful consideration of eligibility criteria, financial implications, and alternative solutions. They add that homeowners should consult with professionals to explore all available options and make the best decision for their unique situation. And that concludes another episode of HECM World Weekly, the nation's only weekly podcast bringing you reverse mortgage-related news for you, the mortgage professional. Be sure to subscribe to our YouTube channel, and we do have an audio edition of this podcast, which you can find on Apple Music, Spotify, and Podbean. Thanks again for joining us, and be sure to return next week for more reverse mortgage news on the go.